Are you thinking about buying a home but worried about the down payment on a conventional loan? Today, let's dive into some options that can make this a lot easier and a lot more attainable for you. We're going to be talking about down payment assistance, gift funds, and what's called gift of equity if you're buying a home from family. First, let's talk about down payment assistance programs. This is money that's given by an entity such as a government backed program or even a nonprofit, and they're specifically designed to help you with some or all of your down payment. Now, down payment assistance is as it sounds, it's for the down payment. But if you're given a $10,000 grant, let's say, and your down payment is only $6,000 as an example, you would have a $4,000 overage that you still have available. That in turn is not lost money. It can go to pay your closing costs to where essentially you could come in to your new home with nothing out of pocket. The key thing on this and a frequently asked question is down payment assistance cannot in any circumstance come from the seller of the property as they're a vested party in the transaction. So you essentially can't go out, talk to a seller, agree to buy their home and say, hey, I want to buy this, but will you give me $30,000 in down payment assistance? It's not an option with a conventional loan or any loan for that matter. Next, let's talk about a gift of funds. If you have a family member that's well off or at least willing to give you a gift, it has to be a gift. It cannot be a loan. You can't have a private agreement to say, hey, I'm trying to buy a home. If you give me $20,000 as a gift, I will pay you back, because that would be a loan, which would have to be accounted for in your debt to income ratio and would be a disqualifier. So it really truly has to be a gift. Now, a gift of funds can be given by a family member, preferably an immediate family member. Things like, oh, this is my second cousin, twice removed on my mom's side. Doesn't work. It needs to be a closer tie than that, like your in laws or your mom, dad, grandma, grandpa, sister, brother, uncle, aunt. Things like that. You can't make any connection and say, oh, yeah, this is my cousin. It doesn't work like that. So if you have someone, let's say mom is going to gift you $20,000 for you to buy a home, help with your down payment, and help with your closing costs. Here's what she's going to have to do. The first thing and the easiest thing is she's going to have to sign a gift letter. On that gift letter, she's going to have to state her name, the amount of money she's giving you, what bank it's coming from, and how she's actually going to provide that money to you, whether it's a wire or a check. And let's talk about that piece. When you're getting a gift, if someone's actually giving you money, the best thing you can do, please, I promise you, the best thing you can do for your lender and for your own sanity is to have your mom or whoever's gifting you the money wire it directly to escrow. When you open up escrow on a mortgage, you get assigned a specific account. And on that account, you can have money come in and money go out. In this scenario, if mom's giving you 20 grand to buy a home and she goes into her bank and says, I need to send $20,000 to this bank account, and she has the wire instructions that your escrow officer provides you, then she just simply needs to fill out the gift letter we talked about, wire the money, and provide the wire receipt showing that the money has arrived. And that's it. Gift of funds is done and you're ready to go. Here's where it gets complicated, and you really want to avoid this. Mom decides she's going to write you a check, or maybe mom has connection to your bank account. She's just going to transfer it to you. No, do not do that, please. Let's say mom writes you a check. You need to give your lender a copy of the check, show the deposit into your account, and also you need to provide bank statements from mom. And here's why. If mom gives you a check for 20 grand and you deposit it into your account, who's to say that you didn't just give mom $20,000 in cash that was not usable on the transaction? Mom deposited it into her account and then wired it over to you. So if she gives you a check, she's going to have to give 2 months of her bank statements, even though she's not part of the loan, to show that the money was seasoned and already sitting in her account, that she didn't just go deposit $20,000 in cash, because cash is not traceable, and then just send it to you. You could have given it to her. She could have had mattress money. It's not eligible on a transaction unless the money is seasoned. That's why we always say wire the money to escrow. Mom's not giving any bank account information or bank statements outside of the gift letter. If you are receiving a gift, please consult with your loan officer or whoever is doing your loan about the best way and the best method to make sure you don't cause a headache for you, mom, and your lender. Here's a less common one that not a lot of people know about, but it's actually called a gift of equity. This would be our third option for down payments and gifts, but this is when you're buying a home directly from family. Now, a gift of equity is a special kind of gift. It's actually where the seller is a family member. And as I stated earlier, you can't go to a seller and say, hey, can you give me $30,000 as down payment? I want to buy this house. But if it's mom, dad, grandma, grandpa, aunt, uncle, brother, sister, One of them, they can give you what's called a gift of equity because you have an immediate tie to them. So let's say the house is a $500,000 home and mom wants you to have this house. So instead of mom giving you $20,000 in a gift for you to go buy someone else's house, she's going to give you what's called a gift of equity, which essentially means the purchase price is $500,000, let's say. Mom, again, fills out some paperwork that says she's providing you a $20,000 gift in the form of equity, making your loan amount $480,000. This means in the end, mom is going to net $480,000, but the purchase price is $500,000, so the $20,000 difference is going to your down payment. With this gift of equity, you can use that for your down payment and to cover your closing costs. So let's say mom's giving you a $20,000 gift of equity and you need $5,000 for closing costs. She could up it and give you $25,000. Whatever that number is, a gift of equity can cover literally everything. So you come in with absolutely $0 out of pocket and you're a homeowner. However, that only works when you're buying from family. It can't be from anybody that you don't know. It has to be a direct and immediate family member for this to work. Just to note on the gift of equity, this can actually be used for a primary home and a secondary home if you're buying somewhere else, but it cannot be used for an investment property. And with a gift of equity, the only thing needed is what we touched on earlier, a gift letter from mom who's going to give you $20,000 to buy her house. That's all we're going to touch on when it comes to down payment assistance, gift funds, and a gift of equity. Understanding all of your options can make a huge difference up front as far as your bottom line goes and your out of pocket when buying. So I challenge you to explore all these options when it comes time for you to buy your first home or your next home. Don't forget to like the video, share it with anybody who you think may find this information beneficial, and subscribe to the channel. We'll see you on the next one.